When an investor uses the equity method to account for investments in ordinary shares, cash dividends received by the investor from the investee shall be recorded as. Our answer is letter C, a deduction from the investment account, because distributions received from an investee reduce or will reduce the carrying amount of the investment.
Okay, now this is where I will discuss the procedure for equity method. Because do you remember in your basic accounting class for the equity section of a sole proprietorship, please visualize your statement of owner's equity. Diba, you start with your capital balance beginning, then you add your additional investments, you deduct your withdrawals, then you add your profit or you deduct your loss. After those four items, then you will now have your capital balance ending. So the equity method class is just like that because we use the equity method also for sole proprietorships, man. Okay? So let me compare the equity method from cost method first class. Under the cost method, you will not change the balance of your investment. If it was initially recognized at 500,000, then throughout the life of the investment, it will remain at 500,000. It will just change if the investment is impaired or revalued. Okay, under the equity method class, the balance of the investment will keep on changing. Every year, the balance of the investment will keep on changing to reflect the effects of the operations of the investee corporation. What does that mean? If the investee corporation keeps on earning profit, if the associate keeps on earning profit, then your investment in associate account will keep on increasing corresponding to the share of the investor in the profit of the associate. For example, the net income of the associate class is 100,000 and your interest in the associate is 20%. So how much is your share in the profit of the associate? It would be 20% of 100,000. How much is 20% of 100,000? 20,000. So the 20,000 will be added to the investment in associate account. So every time the associate reports a profit class, the investment in associate will also be increased by the amount of your share in the profit. But just like in your owner's equity class, your diba, your capital balance will increase if there is a profit and it will also decrease if there is a loss. The same will happen to your investment in associate account. If the associate reports a loss class, then the investment in associate account will also reduce equal to its share in the loss of the associate. So unlike the cost method class, that the investment will remain constant, the equity method, the balance of the investment in associate account under the equity method will keep on changing class. Okay, it will increase every time there's a profit. It will increase equal to its share in the profit. It will decrease every time there's a loss equal to its share in the loss. But aside from these two items class, just like your capital in sole proprietorships, it will also increase with additional investments and decrease with withdrawals. What do we mean by additional investments? If you buy additional shares, then that will be considered as an additional investment. So, definitely the investment in associate account should increase. What do we mean by withdrawal? Any in sole proprietorships class, when do you have a withdrawal, man? When do you have drawings? If the proprietor takes something from the business. The same here. When will there be a withdrawal class for investment in associates? If the investor receives something from the investee or the associate. When will that happen? When will it happen that the investor will receive something from the investee? It is when the investee or the associate declares dividends. If the associate class gives out cash dividends, the cash received by the investor will be treated as a withdrawal. What then is the effect? The investment in associate account will be reduced by the amount of cash received as dividends. So to sum up class, number one rule is under the equity method, the balance of your investment in associate will keep on fluctuating depending on your transaction with the associate or the investing corporation. When will it increase? Two possible scenarios, class. It will increase, number one, if the associate has a profit. And the amount of increase will only be your share in the profit. Second possible source for increase, class, is when you make additional investment. Okay? Additional investment and share in profit. Then, decrease. When does it decrease? It decreases when there's a loss, when the associate reports a loss, or when the associate declares dividends, when the associate gives an asset to the investor. So just like your the capital account for your sole proprietorship, class, you start with capital beginning plus investments plus profit minus drawings minus loss. It's just that in associates class, dili siya ang whole profit kay you do not own the entire profit or loss man. Only your share in the profit or loss. So, I tell students nga, do not be confused with the equity method kay it's very similar to the owner's equity section for sole proprietorships. The same transactions that will affect the capital account in sole proprietorships would also affect your investment in associate. So applying that in number 5 class, what happened in number 5? There is a cash dividend, and we treat cash dividend as a withdrawal class. And what is the effect of a withdrawal to the capital or to the associate investment in associate account? It will reduce the investment account. That is why the answer number 5 is Charlie. That should be part of your stock knowledge for investment in associate class. The sources of increases and decreases to the investment in associate account. Hopefully that's clear. Let's proceed to number 6.
Number 6. The equity method is not required when the associate has been acquired and held with a view to disposal within what time period? Our answer, sir, is C. 12 months from the date of classification as held for sale. Since it is already classified as held for sale, it will now conform to IFRS 5.
Okay, so that's correct. You would be able to answer this by applying the provisions in PFRS 5. Next.
How is the impairment test carried out for an investment in an associate? Our answer is letter B. The entire carrying amount of the investment, including the goodwill, will be tested for impairment in accordance with PAS 36, Impairment of Assets.
Number 7 is bravo. That's correct. Proceed.
For number 8, the excess of the investor's share of the net fair value of the associate's net assets investment is letter C. Recognition of the investor's share of the associate's profit or loss. Letter C, since according to the standard, to account for the excess, it is included as income in the determination of the entity's share of the associate or joint venture's profit or loss in the period in.
Okay, so that's correct. Number 8 here, class, is Charlie. But this should not be a big concern for us, class. This would be a concern now in your intermediate accounting, either next sem or second year, first semester. Okay, but just the takeaway there is there will be an adjustments to the profit of the associate. If the associate reports profit of 500,000 class, you do not just multiply that directly with your shareholdings, with your interest in the business. There will be adjustments to the 500,000. So possible sources of the adjustments are the upstream and downstream transaction and the excess of the fair value over the book value. But again, that should not be a big concern for us right now. Just understand that there will be adjustments to the profit of the associate before you recognize your share in the profit. Number 9.
Number 9. What should happen when the financial statements of an associate are not prepared as of the same date as the financial statements of the investor? Our answer, sir, is letter A. The associate shall prepare financial statements at at the same date as that of the investor. Since in applying the equity method, sir, the associate shall prepare financial statements as of the same date of the investor unless it is impracticable to do so, sir.
Okay, that's correct. And normally, klasa, it would be the associate that will adjust. It will be the associate that will be adjust. Okay, again, we consider the investor as being on top and the associate at the bottom. Daog-daogon rin ni sa investor ang associate class. Okay, next.
Number 10, on the loss of significant influence, the investor shall recognize in profit or loss any difference between. Our answer here, sir, is letter D, the fair value of any retained investments, any proceeds from disposing of the part interest, and the carrying amount of the investment at the date significant influence is lost.
Okay, so the answer is delta.